Hello, my friends. What's up, Landy? How are you today?
I'm doing good. Peace. It's great to see you as always at this regularly scheduled time on Tuesdays. My bad, everybody. I was coming from a different event that ran about 2 hours long, longer than it usually is supposed to, which is kind of the way it is all of the time. But yeah, so some of you might have even been over there in David Gockstein's morning show that is turned into a morning into afternoon, possibly even evening sometimes show. So my bad, peace. Much love to you and much love to the audience out there.
Well, you know what, Landy, as long as the content that you always bring is worth the wait, and it always is, it's not a problem, man. Don't worry about it.
Well, I appreciate that, sir. Today, we're going to be covering kind of breaking down the macro. And I have done that in various fashions here with you, but I've gotten a lot of questions about kind of methodology and where do I start, what's more important to me, and the macro is more important to me than the micro. And we're going to visit a few things here in the macro to kind of illustrate my methodology as it relates to trend, support and resistance, volatility and momentum, the four keys and the four pillars that I have put forth out there to the audience and yourself about how to break down price action in a live auction. And actually, I'm going to visit that while we're, if you want to throw the actual chart up here, we're going to go out to the macro. But when I've gotten a few questions about this, and even in a space that I had held last night, just kind of a pop up to have some people from another space kind of have some room to talk because they were clearly they had a lot to say. And but I had somebody who was very interested in kind of the trading side of things. And when I had said live auction, they were like, what do you mean by live auction? Well, when you're looking at a price chart, and as I'd mentioned here prior, the live auction is the moment to moment sentiment. There is bids and there is asks. So that is on the bid side, what is somebody willing to buy at on the bid side, right? And what levels are they willing to buy at? And you have your bids. And then you have your asks is basically where someone is willing to sell at, right? And you're watching this occur in real time when you're looking at a price chart. Like right now, we're on the monthly time frame. Over on the right-hand side of this chart, we have 5 days and 6 hours to go in this monthly candle, which is one of the other reasons why I wanted to take a look at the macro. Of course, this is Bitcoin. We're looking at the live auction right now. That's price updating moment to moment, right? And that is real-time sentiment. And when we're looking at how to break down our areas of interest, for instance, we start out with our trend. And if we were to look at the macro trend here on the monthly, we can very easily identify that we had the from the downtrending structure here, we had a nice trend starting to form to the upside here, where we did have some lower highs, but we're getting some higher low structure being built in here, an equal low structure in this case. And then we had a downtrend break to a new high. So we had our trend reversal, right? So we had lower highs, higher lows, higher highs. That's a trend reversal. We then moved into that $49,000. We all remember this. July into August, mid-July, we had a nice spike down to $49,000, which was a nice little retest of the ETFs. We've talked about this here. That was the ETF high retest, basically. But we got a nice higher low out of that in the monthly. And now, we are on higher highs again. So we have, a lower high, higher low, higher high, higher low, higher high. We have 4 pieces of the trend. So we have 2 higher highs and 2 higher lows. So we have full trend to the upside here in the macro time frames. So it doesn't matter to me right now if the daily is in a downtrend. We are going to look at the daily because there is a potential trend reversal set up to the downside, but it may not come to fruition, right? We're going to define the criteria that we're looking for that potentially to come to fruition if it is going to result in a downtrend to lower levels. But in this case, we're looking at the macro as being the more important, right? So we're working macro to micro because the macro is going to help us define what we're looking for in the weekly and what we're looking for in the daily as it relates to the weekly. So the weekly as it relates to the monthly, and then the daily as it relates to the weekly, and then you can just keep going down the time frames and relating them to the higher term time frames and defining criteria. So one of the biggest things that we can take a look at here is we understand the trend. Now, what is our areas of support and resistance? Well, overhead right now in the more macro time frame, like a monthly, there's nothing to the left of our chart, right? There is some local areas of interest, right? In terms of the monthly, in terms of like the higher high structure up here, we'll get rid of this uptrend drawing. I did all that talking for a little while there, and probably gave up my voice here. But we see that there is, some areas of interest overhead in the monthly. So we do have some references for the prior monthly's auctions, right? And so we have some history to reference here, but there's no real longer term time frame references to the left here on the chart. So we're in blue sky territory, right? When we were back here and swinging above this all-time high structure back here, then there was still something to reference because we didn't close outside of this high until we got into the November candle here, right around the election, right? So we can identify the swing structure here in the current uptrend and the important areas here. But we can also reference the downtrend and even the prior uptrend. And in this case, because we have a completed cycle uptrend to downtrend on the monthly, what I like to do is reference from it, well, because if we're going to get any kind of retracements here, on the way up, we work from, when we're down here, what are we looking for? We're looking at the most relevant overhead resistance, right? So this swing low and closing low right here from the prior cycle in 2021, right? So we're working our way in an uptrend. We're working our way from lows to highs, right? And we just take it one step at a time. So lows, this is the most relevant low when Bitcoin was coming off of its lows. Of course, we had a high to work off of here when Bitcoin was coming off the very low. We had to worry about this high right here, right, which was an area of interest in January of 2023 here. And then we move up to the next area, and you can see that this was an area of interest on the swing low to the closing low over here. So I just want to kind of break this down so we have something to pay attention to. So when Bitcoin was down here on the lows, we had this more macro lower high to pay attention to in terms of the close and, of course, the swing. All right. And then the next area of interest, we're pretending that we're still down here on the lows. Price starts to rise. Right. So what are we looking at? We're looking left to the most recent lower high because we want to see that lower high broken. From there, we're working our way up to start looking at the next big relevant area, which is a higher low from the previous bull. So we have like two areas of interest to really pay attention to, at least we did back then, to really start understanding what is occurring in price. So I'm just marking those areas on the close and the highs. And of course, for this lower high, and then the close and the low or swing low here of this higher low structure. And then if we were to come down into some of this structure, you'll see that as Bitcoin, began to lose this level here, it put in a big swing low down here, and then broke down and closed below it, and then found some resistance right here, which just so happened to coincide right around this swing low. But we weren't marking that because that wasn't a swing point. That was only a swing point in lower term timeframes. This was a big move down, right? So even though it might have set a low on like the daily or maybe even a weekly and chopped around, as it closed up here at this 31,800 or so, well, it dumped out anyway. And when we're already in the lows, we need to pay attention to this high. We see that Bitcoin rose up off of the high, put in a nice low. So it set the low, but it didn't change structure. We were looking for the structural change to occur, or the downtrend break to occur over here above 25,214, right? And in the lower term timeframes, that's what we were watching, and that was very of keen interest back here in January of 2023. When Bitcoin had started to come off of the lows, we were waiting for, okay, are we going to see a breakout and a close above this lower high structure over here? We subsequently got that in February of 2023. We see that we moved through there even after a big old downward move to $19,500 or so. Then we moved up through this overhead resistance and moved right to the next area of overhead resistance. And that was this higher low structure from the prior bull market move up. And we wanted to see now if this lower high was breached above, we want to see this flip from resistance into support. So we don't want to see it fall back through. And then what did we see? We bounced between resistance. We turned this lower high into support, and then kept tagging the resistance up here at this low, coming back down to support before finally breaking through. And then the next area to pay attention to was a major area, and this was the bear market lower high right here, which was, on a close open at 46,950, almost $47,000 on a swing basis. We're on the 4-week. I should actually mark this on the monthly, so my apologies. We have some more referential data right here for the lows and some of the highs here, so we'll actually have to adjust. I just realized that, but you can actually get some edge there. But in this case, you can see how this plays out on any of these more macro time frames. So we can just make this a much bigger zone up here. So our criteria does change a little bit here on the monthly as Landy goofed a little bit, but you could see the 4-week was giving us some hints as to what was going to happen. We were starting to break the downtrend, starting to bounce back and forth between support and resistance, and looked pretty good at the time. Man, this is just not cooperating for me. There we go. So we can turn Landy's little goof on the time frame there into an actual teachable lesson. So we were starting to get an early indication on the 4-week there, but when looking at the monthly, you can see even more clearly after setting the low, where's the next big price reference? Well, after setting this close open low, we came back and tested it, moved through it, and moved right into this very large zone of interest between $35,000 and 28.8 down here on the swing low for the monthly time frame. See that Bitcoin then went into that zone and then held support after confirming this macro low structure here in March of 2023. we ended up seeing that Bitcoin bounced around and then came up and directly tested this low structure. And we needed to see this low reclaimed, right? And inside of this structure here, when looking at the monthly, it's basically a straight shot down with a lower high at 48,240 and then 45.5 on the monthly close open right here. So when working from on the uptrend here, we see that there was a structural change going on right here. We got a higher low that took out this lower high on the monthly. So we did get a structural change here. So now we are in trend reversal position on the monthly. So if we were going to take a look at some of the criteria for this, we kind of go like this. We've got now a lower high, which is a good thing that we got a lower high here, because the only other place that we would get a lower high downtrend break would have been 48,240 up here, and that is the bear market lower high and that 45.5 area of interest. So when we got the lower high, higher low criteria to break out would be to close above this lower high to get a trend break. Now we're moving from a lower high to higher low. We're starting to see the trend shift. Now we can only get higher highs. So now we have in this area right here a trend reversal setup, and this is what we are starting to then say, okay, now the potential for a bull market is forming right here, because this is a trend reversal setup with the lower high to higher low, and then this candle specifically in October of 23 breaking out above and closing above that lower high. So we have higher low, higher high can only be had from there. And then to the downside, we need to see this higher low hold to get more of a trend forming for subsequent higher lows and higher highs. But when price was moving up, we're moving from the next area of resistance on the left here, being the more macro scale on the monthly, 35.5. We have to look to the next low that was attempted here, right? So we have 38,500, which you're going to find interesting when we really start digging into price action here. And then we have some overlap between the two. So we'll kind of take a look at this. We have $33,000 on this low to around that 38,500 on the close open. We're starting to get a little bit of overlap. So this was very heavy resistance overhead, because we had multiple confluent levels, and specifically we had areas of interest between 33,000 right here, which is this low, and 35,000. So this was a big area. And you see that Bitcoin came up to it and tagged right into that zone and began to close on the top side of that area by $35,000 in that October candle. Now we're going to go and take a look at how this all played out in the lower term timeframes as it relates to this higher term timeframe look. But once price did move through on the monthly to get its continuation after making a higher high, it pushed up to the next major level when looking left at 45.5 to 48,240. So we would just mark this out as a big level of interest, because we have price to reference. And you'll see why this is important going forward with where price is currently trading. But in this case, we see that Bitcoin moved up to this level. We'll get rid of the example for the structural change there. You'll see that Bitcoin closed essentially the next level up, closing right at that 38.5 or just under that 38.5, but wicking into it here. And then finally, from October, we saw this level reclaimed, right? Between this low and this close open get reclaimed. Next month, we moved directly to the next close open here, right? And then that was November into December. Now we're starting to get up and try to test around this lower high. We saw the attempt in December, and then in January, even a spike through above 48,240 here to $49,000. Now, if criteria is if we close above there, we're going to get continuation to where? Now we're starting to look towards these highs up here, and we have two major highs in this area, two massive swing points. We have the 58.8 to 65, And then we have the 61,340, 350 area to, of course, $69,000. And we have overlap here in terms of areas of interest to the upside for this swing structure. And there's where they overlap within that structure is going to be very interesting. And as I begin to point this out, you'll see that price action on the macro is very, very obviously telling us everything that we needed to see and the criteria that needed to be met for the trend to form and for areas to be reclaimed and areas of interest in the macro timeframes that we wanted to pay attention to. And we're going to go ahead and get rid of this circle. We're going to go ahead and get rid of the bands here, and we're going to start cleaning this chart up so that we have just price reference with these areas of interest. Because now, as we start looking at what we've marked off, you can see how price interacted with these levels. And in fact, look at how clean this close open was at the 58.8 level, right, on the monthly. So we are referencing this area of interest over here between that 58.8 and the $69,000. And then we have between the close open and the $65,000 high, this is our 61,350 to $65,000. This is a more relevant level within this overall zone of interest to the upside. And of course, when approaching it from the bottom, it's resistance because this is the last big swings where people were selling. So we're looking at supply zones. You'll hear this called supply zones. And what we're looking for is any retests like back down to if we had gotten to 45.5 to that 48.240, which it did get front run. Then we'd be looking for that area that was passed, right? Once it's reclaimed by the bulls, in this case, and moved through on any candle like this February of 2024 candle. If this gets retested, we want to see this not be supply like it was back here in January before the February candle broke through. We're looking for this to flip back into demand or support, right? And it's all based on the swing structure from the prior cycle with a little bit of sauce for the low side structure for setting the actual lows. And in this case, if we're using the macro, we see that we don't have anything to reference right now except local lower term time frame structure here on the monthly. If we were to start to go down and analyze how things played out on the weekly, we can see things very, very clearly. And how we didn't get confirmation on the monthly until later, but the weekly was giving us our edge with criteria that we could define separately from the monthly. And the monthlies are going to be more important to me than the weeklies, but they go in order. They're all just as important as each other, but we go in order of importance: monthly, weekly, so on and so forth, down from macro to micro. And then we build a plan in the micro to take advantage of the time frames higher, right? So build a plan based on the daily interaction with the weekly and monthly levels, right? And in this case, we had a big downtrend on the weekly, right? And we had the low form. And we know that because we had some downtrending structure here, that Bitcoin had to regain the lows, right? From the swing low over here at 17.5 or so to the close open here at 18.8, just shy of 19,000. So Bitcoin had to get through that level. It tested it, put in a higher low on the weekly right here on a close and a swing. And then we had to see this lower high get taken out. Now we've got a trend shift, higher low, higher high, a little bit of a lower low swing, but a nice higher low close right into this level over here, right? So we're working our way even on the weekly. We're looking left. We're working in this case because it is a bear market reversal, right? So we're getting the downtrend and we're trying to see price reverse off into a trend reversal structure. We have to work from lows to highs in order, right, of importance, right, even locally. So we work from this low side structure. We see the test. We now see a structural change here with a higher low starting to be formed. That kicks in. We're looking to the highs now. So once price moves past these lows, now we look to this high and then this high and then this high. So there was 3 big areas on the highs to break, but we also had trend on our side. We had a higher low, and inevitably we were going to get we were looking for this higher high. Once we saw that, we got a nice higher low, higher high, higher low on a close, lower low on a swing. This scared the ever loving crap out of everybody in the bear market. Everybody was calling for 12K, 10K, 8K, 5K, so on and so forth. But it was natural to find that resistance because this was a confluent area on not just the weekly, but the monthly, right? For a close open that we wanted to see to set the actual macro low. So it got rejected on first pass, came down, and then moved through, set the macro low on the monthly. And then we want to see weekly build structure. So we saw higher high, higher low, higher high, little bit of an equal high close. So not much information there. Then we see higher lows start to form. And over here, this was towards the August into September timeframe of 2023. And our criteria on the weekly is that we regain the monthly level bottom side here. We see that coming in towards, the end of summer into fall. Then we need to see this area on the weekly taken out to the upside. And we need to see specifically that crossover where there was a lot of, where there was crossover confluence between closes and swings on the monthly time frame from the prior cycle. We need to see that area regained. That immediately gets tested. We have the highs taken out from the weekly. So we have a nice structural move to the upside in terms of an uptrend forming. And then we just take it one step at a time. We get through this level. We even saw a close open right on it at $35,000. Boom up to $38,500. We were already in an uptrend and we were expanding volatility, which I'm not showing in this chart because I want to really break down the methodology from macro to the lower term timeframes. But in this case, we saw a move through to the next big level, 45.5 to 48.240. Of course, we had the ETFs come in around this time in early January of 2024. We saw a spike through the level, no close above, a nice direct tap on 38,500, which of course was that big monthly level on a close open. That's picture perfect, by the way. You don't get much better than that. And then right back to the top side and a higher low structure. So we had higher highs, a little complex high here, right into a higher low, and then boom, right back to 48,240. That was the bear market lower high. Now on the weekly, we know that this needed to be reclaimed to then move on to the prior cycle all-time highs in the macro. And we're using the weekly, but we're referencing the monthly for the support and resistances. We saw the close kind of right on that area, which was the bear market lower high. Take out the local structure of the weekly. We get a nice move up. Now we've broken the bear market lower high. And then it's pretty much clear selling from there to go up and test the prior cycle all-time highs. Now we begin to see that. We get a little bit of a nice indecision candle here, and then a move straight up into that overhead resistance from the prior cycle closing highs and wick highs. So our closing highs coming in at that 58.8 to 61,350, and then the actual wick highs at $65,000 to $69,000 of the prior cycle. So the two bottom side areas of the zone are the closes here, and then we get $65,000 and $69,000. We see the Bitcoin moved right to it, closed right at 69, wicked above for a brand new high prior to the halving, which was a character change. And then we see that in aggregate we get the lower high we get the higher high and a close, higher low, and then we went into a bit of a downtrend here, and even tried to reach back for that bear market lower high of the prior cycle test for liquidity, but it got front run because it spiked directly. It literally pinned that ETF high. That's how major players had their bids right around that ETF high when the ETFs launched. Immediately moves up into lower high, lower low structure on a close, but higher low on a swing. Of course, many of you might have been watching my videos around that time. Puts in a higher high and then a higher low, higher high, higher low potentially on a close. I still need to see things closing above right where it's rejecting now, to be quite honest. But now we have no reference to the left. So it's fitting that we're on the weekly because the weekly matters. And we are in because we don't have like macro monthly structure to reference outside of kind of intra candle monthlies. So we have the close open here that we can reference, right? But now we're no longer working off of history. We're working off of what's more important in terms of local stuff. We don't have historical price action to reference. So in this case, we can go to the monthly. We can look at the close open here. We can look at the current low of the active monthly candle here and say, okay, this is interesting. And we can even look at where this close open is coming in. And when we go back to the weekly and take a look at what's occurring on the weekly chart, we're just seeing a reflection of where that monthly close open is from the December into January candles here on the weekly. You see the close opens right here. You see the most recent middle of January spike low to $89,000. And what's important here is we know that these are monthly levels, right? But they're also main weekly levels. So do we really need to reference the monthly levels for it? I would argue no, not until we see an actual swing structure form, which, by the way, is going to be the high up here. And we can only really identify that it's a high up here because we have a high in the weekly because we don't have a high in the monthly yet. So if we look back at the monthly, there's no high here. There's a swing high. There's Bitcoin trading, above 102, which is well above the close open here. So the monthly doesn't give us any edge in this case now because we're in blue skies. There is no reference for price action to the left on our charts here. So what we can do is we can modify that. We can modify this area and just call this the weekly. So we've got the weekly close open. We've got the weekly closing high here, which is a higher high to the wick high here. And we see that this has been tested. So now we can get some zones here, and we can even, maybe color the box a different color. Maybe we fill it with, gray in this case, because I'm using white on a black background. And then we can say, okay, this is the zone of interest to play in on the weekly. We've got 93, 563 to $89,000 in terms of this weekly structure. And then we've got the top side here. We've got 104, 447. So basically 104 and a half to that 108. And you might be thinking, well, what about this wick high up here? Isn't this important? Yeah, it is. But what we're looking for is closes above that 108, 388 to go test that high and then move up, right? Because we have a higher high confirmed on a 3 candle structure here from the move up. We saw the big red candle.
While it's relevant, I'm just going to point out that dark red candle is a little hard to see on the black background.
Which one? This one?
Any one of them, right? Like, so that, like, I was looking at it funny, and I was wondering where I couldn't tell that exactly where that candle's. It's hard to see that the red,
okay.
The dark red on the dark background is a little, at least for me.
I'll zoom in to help out, but I'll tell you that if I put on a white chart, everyone's going to be crying at the same time with tears across the internet.
I don't know what the solution options are. I just know that it's a little bit hard for me to see, and it's something I've noticed a number of times. I never bothered saying anything about it because usually I can figure it out, but
it's because it's a purple candle body with a red outline, so. Sometimes it can be a little tough, especially in set windows. So my apologies, but
is it possible to make that red outline a little bit brighter red?
I mean, we could go full on red in this way, but it interferes with my bands, which is one of the reasons why I don't use it.
That's all right. But it didn't actually it didn't make the wick more visible anyway.
Yeah, the wick isn't going to be more visible in most cases because they're just so thin on a time frame like this. And then when we go to lower time frames, it's even worse. But what I will say is, what we're looking for here, and I'll switch this back because we can always reference bands if there's time. But what we're looking for here is that we see a confirmed high, right? And this is the confirmed weekly all-time high on a closing basis. It's not the all-time high on an auction basis, on a swing high or a wick high, but it is on a closing basis. So at 104,500 essentially. And we got this confirmed on closes, on the closes below this low here at 94,200. This confirmed this weekly high. We came down and we're trying to see if we're going to get a closing higher low with a swing higher low at 89. Where would that confirm? Well, inside of this, support to resistance structure overhead, we need to see essentially closes. It's kind of confirmed technically on a lot of charts, with the early January candle closing above 98,969. Nice. Which was this candle high. But realistically, we need to see closes above like 102,735 here to then go and test these highs. That would really solidify this swing low or wick low and this closing low coming in at 93.5. That's where we have still indecision here in this structure. We saw a big swing up to a new all-time high, specifically on Inauguration Day, and then a move back down. Now, the danger is here on the weekly for Bitcoin is not that like we're looking for a macro structural breakdown, but any closes below last week's low at 99,416, well, that's going to set a lower high technically. And we would likely see, Bitcoin fall further and try to test down further in the range. And then if it starts to break down from the closes, then we're looking for the wick low. If it breaks down from there, we have a trend reversal set up on the weekly. Not exactly what I'm looking for in terms of being something relevant to the monthly, where its last higher low on the monthly is down here at this $49,000, which, we could reference a more structural chart in that regard, but I'm not looking at that as a viable target unless the weekly got continuation below this area and lower. Now, when looking at the more macro stuff, we can take a look at how the daily has played in these areas, and we're just working down the time frames, right? And we can see that, the weekly, although there is the danger that it could set a lower high and lower low, it's not there yet. In fact, it's closer on where it's trading now to setting a higher low than a lower high. But the structure is painting itself there. So let me just go back and actually reference that just real quick one more time. The danger for bulls is that it sets a lower high and a close, right? That's a close open. Right? If we see any close this week below essentially 99,400. But it would be a lower high with a higher high swing. So realistically, that just usually will confirm the start of a consolidation, with the lower high and a close being, a little bit concerning for the bulls, but it would only be upon breakdown of this closing higher low structure that we are starting to see attempt to be formed, that we would start to look for a structural breakdown at $89,000 if it were going to occur. At minimum, be tested. If it was going to occur, then I would be looking for it to break down further. But Bitcoin trading right here is more likely to confirm or has a chance to confirm above that 102,735, which would solidify this area for me, myself, even though for some it's already solidified in this area. It's not for me. I need to see closes above 102,735 on the weekly to confirm this as a higher low on a close with a higher low swing in place already. So we're in a bit of a transitionary period, potentially coming up in price, and that is going to be higher low either confirmed or possible lower high, because the range is getting tight, because what we are seeing is consolidation in the daily time frame. So when we go and reference the daily, we have some trend shifts. We have the big move up, which is all higher lows structure, right? We're getting higher lows and higher highs over here. And then we get a trend break. We take out this last higher low. And this was taken out after trying to use this area as support on a close open. But then we got some swings down below, and then we got a lower high, lower low, and then we got a big old trend break here. So now we went from uptrend to a trend reversal setup. 3 parts of that trend that then got broken. We broke the downtrend and then went right back in for equal lows on the closes with lower low swings, and then another, possibly resuming trend to the downside, but right into support, and then another trend break. And remember what I've said, the trend is your friend until the end of the trend. When the trend is unclear, everyone's in fear. But realistically, what does that mean? We're just in a range. So the range is either going to break to the upside or it's going to break down to the downside, right? But it's a very large volatile range with very large volatile swings in price in the context of the dailies, which provides for a very nice trading opportunity on the long and the short side. And until we see closes back above 108,400, then we can entertain higher highs. But we want to see closes that then can go and close above this daily at the 109,500, start moving on to areas to the upside. To the downside, we need, if we start seeing closes back below 93.5, we're looking for the daily structures in here to get tested, 92,000 all the way down to this $89,000 area. If we start seeing a breakdown below there, then we're looking for lower. And we would want to see it not just on a swing, but also on a close for continuation, because we could see if price did fall below 89, if it's on a swing, it could hit some of the consolidation structure on the daily over here, but maybe close back above 89, saving itself, grabbing liquidity, doing that kind of things. But if it starts to close below there, that's where this structure over here on the daily is going to get tested and possibly lower. And we have really clear criteria based off of just using monthlies and one real set of weeklies, right? We haven't done much else. And then we can refine this on the dailies, right? For this local structure. We can say, okay, on the dailies, we have a swing high up here above the primary overhead resistance on the weekly. We can say that above there, if we start to get closes, obviously above the all-time high, we're looking for higher price action, especially on closes above 109,400 to 500 or so. And if we start to break down from $89,000, there is some daily structure that is not significant on the weekly and it's not significant on the monthly, but we have some daily structure that is kind of like the line in the sand for the bulls down here. We'll paint this up red instead of green. So now we've got some areas of interest that are just outside of our primary levels that we've been identifying, right? And that's where, things potentially get interesting. And we see that we can start then adding in our confluences, because so far we've been working off a trend and then identifying areas of interest in terms of the swing in that trend for support and resistance. So where we've gotten those pivots or reversals in price on those higher term timeframes, and then we can start breaking that down in this daily. And in this case, we can go ahead and identify this area as like, okay, this is going to be our red zone. We don't really need a zone to the top side because it's right around the weeklies there. And we can kind of call this the red zone. This is danger, 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 right? And then we can start looking within the trend here, and we can look left to see where we have primary swings, where are we seeing the most swings come in. And I would just say, like, right around this close open to swing high is an area of interest. We had a high put in here. We came down for liquidity. We moved up and tried to, we even got rejected from this high over here. So we're going to just go ahead and start messing around to find some areas of confluence and inside here on the daily. And, I kind of like this one. Maybe we could take this high over here, but it's the same as this high. But we got a little bit of a thin zone of interest right around the middle of our support to resistance zones from that weekly. You say, okay, well, the daily's clearly got some sort of an inflection point here. Let's go ahead and mark that off here, right? So now we have some more refinement, right? And then we can just kind of look at what's happening in the most recent price action here on the daily. And there's even more refinement. You might want to take this close open structure here where we saw a bunch of closes come in. They were getting slightly higher, but a bunch of wicks in this area, including that 104 wick over there, before moving up to higher highs. You might want to identify that zone. And in fact, it's probably good to do so because we can see that, there is, price sitting right on it on a close open over here. So now we're getting even more refinement, but it's all in the context of what's happening in this current trend, because what we have now on the daily when looking at this current trend is we had the big uptrend, right? Big uptrend. And then we got a big trend break to the downside, lower high, lower low, trend break, equal lows with some lower low swings, and then a big trend break back to the upside. So we were trendless, which means consolidation in this case. But now we do have a trend. We have a higher high on a swing and a close here that moved into a higher low that sat right on this area of prior resistance. So we have a support and resistance flip in this area. We also have some areas of interest here on this particular high. This is a pretty big high that was put in. So we can even, kind of mark this off. Not necessarily, you might be thinking like, why aren't you marking a zone here? Because we have commonality with this zone. I'm just placing a line right here. We're seeing the majority, or just about the majority, of these closes coming in. And then we can just identify this. It is up to you. You're going to find maybe different areas to pick out than I will. But now we can kind of refine what's going on with the trending structure here. And to make it a little bit more clear, we'll go ahead and use our path tool and just kind of, spec out. Well, in fact, we don't even need to do that. We can use the closes. We can go with the line here, the line chart instead of the candle chart. So we have the higher high, higher low, higher high, tried to set a higher low, lower high, right? But it's sitting right in a support zone. It's even got a little bit more that it could go. If it takes out this low, well, we also know that that was an area of interest over here on the highs. So what are we going to look to next? And where's this low coming in? We have to watch this 101, 200 or so on a close. I would argue just generally 101. Anywhere below there, we're probably looking for this 99 to get tagged again. But we've already seen this in the dailies, right? But that's where we can start defining and refining that criteria for what it is that we're looking for. And in this case, we saw that we have the higher low on a close, higher high, but then we're starting to form and got this lower high on a close, obviously lower highs than the all-time high up here on a swing. So we have a lower high in place. And this is only the potential for a trend reversal setup for the bears, because we need to see this low dropped, which is now at 101, 175 in this case on the close open right here. And then we need to see the actual low itself break down on a swing, which is at 99.4. We did see a lower low swing, but if we get a higher low close, well, where do we need to see that close above? What are the conditions to get a higher low close with this lower low swing, which is technically starting to be, it's, swing lower high to swing lower low. It's technically still a trend reversal setup, but I like to work off the closes and have the nuance in here, because if Bitcoin closes above 103,228 in the next couple of days, or even today's high at 103,770, we're going to see this start to form and solidify this swing low as being a viable major swing point on the daily, as well as a closing higher low as it relates to this. So we'd have a lower low swing, but a higher low close, which means that we can just look right back to the top side and still have all of this overhead resistance to pay attention to, and then possible continuation with higher highs if it was able to close above there. But you can see how we're using the macro, integrating that in with the micro. And, we could get even more refined and see how these things are playing out in lower term timeframes. So I wanted to kind of break down that process, because by going through that process, I want those of you at home and those watching, of course, when you get some time, to actually go through this exercise and try to identify these things and order of importance from higher term time frame to lower term time frame. And that's where you'll find that if you practice that, you'll still have some questions. And I want you to bring those questions of like where things are ambiguous. You really lean on the trend on a swing compared to the trend on the close. And then you identify the close to the swing as the area of interest. And then you work your way down the time frames, and you can get as complex as you want or as simple as you want. It's really dependent on you. I just wanted to kind of walk through the process. So I hope that was beneficial for everyone today. I got a ton of questions about that, how to kind of break things down. And by the end of this, this stream here, I've got a mess on the charts, but we know what this mess means. And I do encourage, if you're going to put a mess on the charts, that you use different colors and you differentiate, what is a monthly, what is a weekly. I didn't do that for the sake of, we don't want to sit here and watch Landy label everything and change colors constantly and screw around
You did a
while
little
trying to
bit.
talk.
You did a little bit because I followed that. I
Yeah,
mean,
a little bit.
You did a little bit. And I honestly, this might have been the most informative one for me yet. To be honest, I think it's a really great breakdown of how to use the time frames, and and then look at the zones in the lower time frames on the higher time frames from the higher time frames, and that breakdown is kind of is a little bit of an unlock to me.
Well, the thing that you gotta really understand is when you do this, I do encourage you to stay organized. So utilize one color for the monthly, one color for the weekly, one color for the daily, or a couple of different colors. Have your I like to do it like stoplights. You have, green, yellow, red, and then you can identify kind of, in the yellow zone when things are kind of neutral, in the green zone when things are bullish, and the red zone where things are bearish. But that's also where you need to understand, like, green means go if it passes here. That means that you do need to have the opposite thinking when at the top side of a zone. If this were green on the weekly, you still have to look for the short side. Like, is there any short side here? Because you have to play the counter because it is resistance, right? Until it breaks through. When it breaks through, then it's green means go. Red means, so you'll see some people will have red overhead and green down below. It really is up to you. But I call them zones of interest, and I set conditions. You close above or close below for continuation, right? Close above, the top side at 108,400. Essentially, we're going to get continuation to the all-time high, possibly higher. Closes above there, continuation further up. Closes below this bottom side of this range on the weekly, or in it, but closes below, more importantly, then we're getting continuation down, right? So these are conditions that need to be met. We'll see them form on lower term timeframes than the weeklies, on those dailies, and then below we'll get an indication on the 12-hour, on the 4 and 6 hour, and then as it relates to these higher term timeframes, right? And you just keep digging down further with the reference of those higher term timeframes guiding you.
Right on. And so I think we're wrapping. We have a hard stop at 2 today, and we're a little bit past that.
It's not really a hard stop, but there is some interesting things going on in the Stacks ecosystem with some of the more premier products that are being built there. I mean, I think that every product that's being built there is premier, but I think maybe more relevant to Bitcoiners specifically who are wanting to come over to investigate how they can unlock that Bitcoin liquidity. And now there's stable coins, right? And that's USDH. So Hermetica and our good friend Dave is in a Spaces event right now with them. So I would like to jump in there. I'm sure that you would probably want to listen to, and maybe you've also got some family to pick up and probably some food to eat.
Oh man, I can't find any food. My wife has me helpless. There's some old roast beef, but it's like 9 days old, and I'm like, I don't know.
Should I eat it? It's one of those questionable things. Like, hey, I'm hungry enough. Let me take the chance.
I'm super hungry now, but I don't want the headache tomorrow. That's really what it boils down to, But yeah, I will definitely also be joining you to listen into. I'm a huge fan of Hermetica. I love Jacob and what he's doing and what he's built over there. So I'll also be joining you over there as well.
Awesome.
And this was again, great episode. Love what you do, man. Happy to have you. Super ecstatic to have you on our network, and really excited for where things might be heading. So we'll keep doing it.
Yeah. Oh wait, we're gonna get into how to leverage this for trading soon, and obviously when we get into that, it's gonna be a heavy dose of you must have a plan, and this is not financial advice, and we're gonna go over risk management, and we're going to keep it as generic as possible so that you can map it onto your own plan, which you would create for yourself. But that's going to be the next step. We'll see if it's next week or if we're going to maybe we'll still respond to some questions. I know that I get a lot in my DMs. And I encourage, if you have any questions on X, just post it. There is no such thing as a stupid question. If you don't know, you don't know. That's why you ask.
The only stupid question is the one you have that you don't ask.
Exactly.
Stupid.
Well, Peace. I really appreciate you giving me a platform to talk about this stuff. It's always a joy to see you. It's always a joy to talk with you and be here with you. So, we'll be continuing this going forward. And I want to say thank you to yourself and the audience out there. Big ups to everybody. And I hope that we're all learning something together, including myself. I learn a little bit more how to describe these things every time I walk through it. So
that's right. We're all just improving every day. If we look at it, if we all look at it that way, we'll achieve some great things. I believe that. And really, yes, man, always appreciated. Great chatting with you. I wish we had more time to chat a little bit offline on things. We should book a time. But yeah, I know you're super busy, and I also am, unfortunately. I hate how busy I am, actually. But I mean, it's all for good stuff. But I'm just I'm busy. So but man, I love you. I love this stuff. And thank you so much to our audience for tuning in. We did actually have a few friends say hello earlier, but I didn't want to interrupt you. So Cryonics, who I think might be a friend of yours, and then Reese and GPSC all gave us some shout outs during the show.
Awesome. Well, appreciate you guys. And we're gonna have definitely ask any questions that you all have for any upcoming episodes. And live streams, of course. I call everything an episode, but it's like a TV show.
Working on getting a block survey account. We can maybe start asking some questions, just generally incentivizing some responses, and that'll help us with all of our shows, actually. So we'll get some questions.
Awesome. And true ethos, live stream ethos, F it, we're doing it live every single time. And much appreciation goes out to all of you. Peace. I will see you here again next week. And of course, we're probably going to be talking to each other in Spaces events here very shortly. Anyway, go check out what Dave's got going on with Hermetica. For those of you that are new to this stuff, it's a good chance to kind of figure out what's going on in the ecosystem, because there's a lot of exciting stuff.
It's just for those that may not have a chance to tune in, Hermetica has a dollar stablecoin backed by Bitcoin that, as of this morning, was earning 30. You can stake it and earn interest, yield bearing dollar stablecoin backed by Bitcoin on Stacks. Hermetica. You go to hermetica.fi to check them out. But there's a space on X. You can actually ask questions about it if you're interested. So check them out. Thank you, Landy, for tuning for everything, man. I'll talk to you soon, and I'll probably catch you in the space. I am Peace Love Music. We are DeOrganized Media, coming at you live on Bitcoin Live Decentralized Broadcasting. Y'all have a blessed day. Stay safe. Peace out.